All right, good afternoon, guys. How are we doing today? If I can get a quick audio video check, let me know you can see my screen and that we're coming through loud and clear here. All right, thank you, Robert. Appreciate that. All right, well, welcome, guys. Hope everybody's had a good trading week and trading day. As you saw, man, the market's been flying today, so I hope you guys caught some of that good stuff headed down there. We've been flying down here and then flew back up a little bit. We'll see what happens this afternoon. So some great trading opportunities, some great opportunities for trading Nadex products as well here. So my name is John Skelton. I'm with apexinvesting.com. And this webinar today is brought to you and hosted by Nadex. So we are thankful for them having us here. And they have us here to, help you understand who and what is Nadex, how the products work, what are some different ways you can trade them, kind of share some of our experience, in different ways that we trade them and how we utilize the Nadex products ourselves and how you can do the same. So today we're not going to be necessarily focused on, one specific Nadex product. We're not going to be focused on one specific Nadex strategy. I want to address a very common misconception and a very big point of confusion for a lot of people when it comes to Nadex. And, I've talked to some people that say, well, I don't use this particular Nadex product because of the risk, or I don't use this particular one because of the reward or the risk-reward ratio. And truly understanding risk and reward with Nadex, with all their products, is a very important thing to understand. For those of you that have traded Nadex for a while, this may be very elementary and you have a good understanding of it. For those of you that are new, this might be a little bit of eye-opening for you and, help you expand into testing out some of the other Nadex products. So we're going to talk about really understanding risk and reward. So let's take care of our disclosures here. Trading Nadex involves risk, may not be appropriate for all investors. Past performance not indicative of future results, and all trading decisions are your own responsibility. Once again, I'm with Apex Investing. We're an online education company. We've got over 25,000 members now. We've got, live trade rooms and trading, indicators and strategies and systems and a lot of free tools over there. Come, check us out, take advantage of some of those. We're a Nadex education partner, but we're traders just like you. I trade Nadex binaries, spreads, and touch brackets almost every day. I've already traded 3 trades this morning on Nadex. Okay, one's still open now, traded a couple earlier. We're traders just like you, and that's what we're here for is, to kind of share some of our experience there with you. I've been with them for about 5 years now, and, happy to be here on this webinar with you. A couple things about Nadex. If you hop on over to nadex.com, you can get some great information on the different products they offer and kind of what those are and how they work. Right here, if you don't have a demo platform, Nadex will give you a free $25,000 demo account. Make sure to hop on and get one of those right away. Great tool to use for practicing, new things and, mastering your strategies and systems. Learning Center, a wealth of free information and education in here. Different webinars, videos, and FAQs. But if you click on webinars, this will show you all the upcoming webinars you can get signed up for and registered, and then get reminder emails of when they're coming out. Yes, the webinars are recorded. If you've missed a webinar or want to catch up, or if you feel like anything today is kind of over your head, we're not going to necessarily go into a long stretch on the basics of the Nadex products. You can go right here to On Demand, and just scroll right here and find me here, John Skelton with Apex Investing. And you can watch a ton of recordings in here. Everything from the very basics of, what is a binary, how does it work, choosing the right one, some different strategies, how to trade news events, volatile markets, part-time at night. A ton of information here you can go and watch on your own, at your own pace, and on your own schedule. I got to give a lot of props to Nadex. They do a lot for their members when it comes to free tools and education. And so definitely take advantage of those. So let's talk a little bit about max risk versus planned risk, okay, when it comes to Nadex products. What do I mean by max risk? Let's go ahead and pull up the Nadex demo platform here. And we're going to just kind of walk through like each option real quick here, each product. Let's start with binaries. Okay, let's do some forex binaries. Let's go to euro dollar. Let's look at the 2 p.m. expiration coming up here in about an hour. Okay, well, here's the strike ladder for all the 2 p.m. expiration binaries. We know that each one of these is a different binary contract. Okay, and the offer side is what we can buy it for, the bid side is what we can sell it for. And we know that at expiration, a binary is worth either 0 or 100. You can kind of draw a 0 up here and draw 100 down here, and you see how the price is kind of spread between there, 5, 7, 9, 16, 30, 40, 50, 60, and so on. Okay, so if, for example, we were to open this ticket right here, okay, and we said that, we wanted to buy this particular contract. Well, the great thing about Nadex is all of their products are capped risk. Okay, if you're wrong and the market flies against you 2 points or 200 points, okay, your risk is still capped, all right, at a certain level. And not only is it limited and capped risk, but it's known risk up front before you ever get in the trade. You know exactly what you're getting into. It's listed right here on the ticket. If you click that you want to buy it, okay, and if you buy it this price, $53.25, it lets you know right there your max loss, $53.25, your max profit, $46.75. If you add these two together, it's going to come to $100, which is the most a binary can be worth at expiration. Okay, so what this is saying is with this particular contract, the most you could lose, your maximum risk is $53.25. Okay, no matter what, whether the market flies against you, but per single contract, buying at this price, your max risk is $53.25. Okay, so I know a lot of you, and you've heard me say this before, we'll go here and you'll look at some different binaries and you'll open up this one right here. And you say, well, what if I wanted to buy this one? Ooh, max loss $82, max profit only 27. I don't like that, right? I don't like that max loss number, okay? Because with the binary at expiration, it's all or nothing. And so in that instant, based on the difference of 1/10 of a tick, you could lose this dollar amount right here at expiration if you're wrong. A lot of you say, ooh, I don't like that. I want to look at something different, and you go and you open up this one here and you say, oh, look, my max loss is only $7 and I can make 92. I like that. I want to get that one. Okay. And a lot of you base your decision about which contract you choose based on the risk amounts, right? We've all done that, especially when we're new. And if you've been around a while, you go back and watch some of my videos there where I showed you. We'll talk. I talk a lot about how that's the exact, complete, 110% wrong way to choose a contract. You don't want to choose a contract just based on the maximum loss or the maximum reward number here. Yes, in any strategy or system, you have to have a good, probability of successful trades, and you have to have a good risk-reward ratio. But if you're only choosing contracts based on this number, okay, often you're going to be choosing the wrong contract for your strategy or system. Okay, there's a time and place for these very low-risk trades here, but it's not every single trade. Okay, and you can go back and watch videos about that. But what I want you to understand is, so a lot of people will do that. They're like, hey, with binaries, if I hold to expiration, it's all or nothing. And I just can't stomach the thought of when I see that max loss, knowing that at that moment of expiration, I could be down that much. Okay. So this number that's listed right here is always your max risk. So when I talk about maximum risk versus planned risk, we're going to talk a little bit about that. So for those of you that understand binaries, you know what I'm talking about. You know that at expiration it comes down to that final moment there, that final just a little bit, and you don't like seeing those big numbers. So when you jump over here and you start looking at spreads, for example, okay, then it really throws your head in a daze sometimes, right? Because you've got these different spreads here, all right, and you say, hey, maybe I want to click this one, and what if I buy this? Whoa, max loss 165. I don't want to trade that spread because I don't want to have a maximum loss of $165, right? Well, and what you have to understand is spreads are not like binaries. It's not all or nothing at expiration. It's $1 a tick, right? Okay. So you see that max loss number and it scares you away of, oh, I want to find something different. I want to find a different one that I could possibly trade. All right. I want to find, something that's not as, expensive there. And I'm not going to have to put up as much money. Okay. For example, maybe I want to buy this one. Oh, look, that's only $5 risk. I want to buy that. Well, you also have to realize, where are you buying it at? 1322. Where's the market? 1220. The market's 100 points below, 100 pips below where you're buying it. The market would have to go up 100 pips just to get to where you bought in. Okay, and if you watch some of my past videos, we really go through this, and you'll understand why just randomly choosing a low risk trade is not always the best bet. Okay, so granted here, look at this one. If you chose this one, okay, well, it's only $30. Okay, $30 is your max loss, right? And where are you buying? You're buying at 1222. The market's at 1220, 1221. Okay, that's probably a much better option there for you if you're trying to mimic what the market's doing. Okay, now granted, yes, you can go and find one and you'll see what, oh, that's $154. I don't want to trade that one. That's too much. Okay, well, you have to pick the proper strike or the proper contract based on your strategy or system. How much time do you have to expiration? Where are you buying in at? Where's the floor? Where's the ceiling? How much room do you have to profit, right? What's your expectation of movement? How far do you expect it to move? Okay. And you cannot look just at this risk reward number. Okay. Especially here, right? Because look, oh, it's only $5 risk and I can make $248. I like that. Yes, but the market's 100 points below you, 100 pips below you. The market moves in your favor 100 pips and you wonder why you're not making money, right? Because the market hadn't even caught up yet to where you bought. Okay, so you cannot base things just off of max risk and max reward. You've also got your Nadex touch brackets here. Okay. And we can go look at forex. All right, let's go look at forex. Let's look at the same thing. Euro-dollar. And let's see here. 1220. We can grab this one right here. Max loss $200. Max profit 54. Okay, well, you should not shy away from this contract just because of this max loss number. Now, this may not be the best contract for you because you've only got 54, pips of profit and you're expecting a big move. So, maybe you want to go out a little bit further and you want to find a different bracket that's like, okay, max loss 99, max profit 154. Okay. All right, because I'm expecting a big move. So I want a little more room to profit. Or you can see this one. Notice the ceilings here. This one has the highest ceiling. So it's got the most potential for profit. Max loss $49, 48, profit about 205. So I've got a lot of room there. Okay. So you do want to make sure that you've got enough room to profit if you're expecting a big move. Okay. But the real point here that I'm trying to make with, the difference of max risk versus planned risk, okay, or risk versus true risk, is the numbers that you see, okay, are at expiration versus an early exit, or their worst case. Okay, let's flip back here to this one. Okay, so when you see this number here, $197 of risk, okay, you cannot think like a binary trader, and you cannot think of all or nothing at expiration. Okay, you're not risking 197 all the way to expiration, and right at the last second based on settlement, you're either going to lose that whole 197 or make this whole 57. That's not how it works. It's not all based on that. With spreads or with the touch brackets here, it's based on $1 a tick. So if you bought this particular touch bracket, what would have to happen for you to lose the entire $197? Who can tell me? What would have to happen for you to lose that maximum loss amount? The market would have to go, if you're buying, you're expecting the market to go up. But if you're wrong and the market goes down, how far does it have to go down for you to lose and be down your entire maximum risk? Can anyone tell me that? Does anyone know? Yeah, exactly. It would have to go down an entire 197 pips, right? I mean, let's look here. Here's a euro-dollar chart, 5-minute chart, okay? Price is at 1.1219. Well, if you were buying, going long, because you thought the market was going to go up, okay? The market would have to go almost 200 pips against you. I mean, I have to squeeze the chart here just to find that, right? You have to go way down here, basically, okay, for you to be down that entire amount. Okay, that's maximum worst case risk. Most of you that have a trading strategy or a trading system, you have rules for that system, right? And in those rules, it's like, okay, hey, if I get a, entry to go long, well, most of your strategies or systems should have a stop, right? Of, well, I think the market's going up, but if I'm wrong and it comes down, if it comes down a certain amount against me, I'm going to get out, right? Like, let's say, I don't know. Everybody's got a little bit different system, but let's say that your system was, well, I'm going long, but if it comes down to this bottom, this low here, okay, if it breaks that low, then maybe I'm wrong. It's not going up, and I need to just go ahead and get out and protect my loss, right? Not take any more of a loss, right? Well, where's that at? Where's this low at? It's at 1206. You see that? 1206. Where would we buy this contract at if we were buying this one? Okay. Well, right here, it'd be 1220. So what's the difference of 1220 and 1206? It's 14 pips, right? $1 a pip, that's how much? $14. So yes, if the market blasted against me and I held on to this thing, the most I can possibly lose, no matter what, is 193 bucks. So 193 bucks is the amount that I'm having to put up out of my account on hold to get in this trade. But if I'm following my rules, if it goes down against me 14 pips, I'm going to get out anyway. So I'm really only going to be down, how much? $14. Okay, so do you understand the difference there of planned risk of where am I going to get out if I'm wrong? That's planned risk. That's managing your trade, right? Compared to, well, what's the worst case world-ending market flash crash worst max risk. Well, that's listed right here. But you're going to manage that trade anyway and exit, right? So you cannot, don't let yourself fall into the trap of, oh, I'm not going to choose a particular instrument or a particular contract because I don't like this number. You have to choose the contract that best fits your strategy or system, gives you the best edge, has a good risk to reward ratio. Okay? Now, you can look at this and say, well, that's a bad risk reward ratio. Risking 193 to only make 57, that's a bad risk reward ratio. Okay, well, maybe there is a better contract, but let's look here. What if you're, looking at this trade to go long, right? And you're looking at some type of, support and resistance up in here, okay? Just as an example. Say your target is up in here. Like you're expecting the market to go up into here somewhere. All right? Well, if you're getting in at about 1220 and it goes up to about 1270, you're targeting about a $50 profit, right? Okay? So if you're targeting a $50 profit and you're going to manually exit if it goes down against you $14, you're risking $14 for an approximate $50 target. That's like 1 to 3, 3 to 1, however you want to say it, right? So is that a bad risk-reward ratio? Okay, you can't always base your risk-reward ratios off of this ticket here. This is just let you know where's the bottom of the bracket, where's the top of the bracket. How much money do you have to put up? How much room do you have to profit? Your risk-reward ratio is based on your chart. You don't let a ticket determine your strategy or system. You let your strategy or system determine your strategy or system, and you let the strategy or system determine your risk and reward ratio. You're clearly looking at your strategy or system going, this is where I'm going to get out. So the max I would lose here is 14. This is where I'm targeting for. The most I can make is 50. Okay, great. That's my plan. That's my trade management. That's my risk reward. Now let me just see what's the best contract to use for that. Which one gives me the most room to get there? What expiration gives me more time to be right? And yeah, maybe which one do I have to put up less money to get into, but not be buying or selling way far away from the market? Okay. So does that make sense? Or if we flip back over here to these spreads again, and we're looking at these spreads, and we click on a spread and say, hey, I want to check out this spread. 159. I don't want that one. Okay, well, why not? Maybe there is a better one, yes. But do not let this number on this ticket determine which contract you choose. You have to choose the one that's best suited. Okay? Does that make sense? Let's go back to the binaries, for example. Let's look at that again. We were just looking at euro-dollar charts. Let's look at euro-dollar binaries. Let's say 3 o'clock. Okay, well, hey, I think the market's going to go up. Let's say that that's your bias, right? You're looking at your chart and you're like, it's made this pull, but I think it's going to go up. And I think I'm going to trade a binary. I mean, if I think it's going up, I want to buy, right? So, I mean, that's what I want to do. Let's open this ticket here and say buy. Oh, max loss, $80. I don't like that. Get rid of it. Oh, look, $7 risk. Oh, I like that a lot. I can make $7 and profit 9. Oh, I'm going to place that order. Then what happens? The market starts going your direction. It starts going up. You were right. You bought. You're feeling like a trading god. And then your binary expires at 0. Worthless. And you're upset. Well, look at what you're doing. What does this strike say? That the euro dollar will expire greater than 1242. Okay, where's 1242? Well, it's way up here. 1242 is right here. Now, that may not be a bad contract if you have a target and you have a reason to think it's going to go way up there. But just because you're right and the market's going up and it's going up and it's going up and it's going up and it's going up and up and up and up and up, doesn't mean it's going to go all the way up here and stay above here until 3 o'clock, does it? Now, maybe you have reason to expect it to, and there are times where you'd want to buy that. But what if the market just happened to go up, 10, 15, 20 ticks, 20 pips, which would have been a nice, a little profit on a different binary. If you had got a binary that was closer to right here where the market is, and hey, as long as it goes up and stays above where it is right now, it would expire profitable. But you're choosing stuff that's so far away because of this number right here. Okay, so that's the difference of planned risk versus max risk. You can exit early. Now, that's another thing that some people don't understand. Okay, let's say that you got this particular binary right here. Okay, and again, this is just an example. This is not a trade recommendation. Okay, and let's say that you placed that order. You bought this binary for $57. So your total risk is $57. So at expiration, this binary will expire either worth 100 and you made 43, or it expire at 0 and you lose 57 at expiration, 0 or 100, right? Well, you can exit early. This binary expires at 3 p.m. You don't have to hold it all the way till 3 p.m. You can get out of the trade early. Let's say that we bought it for 57 and the market does start going up. And as it's going up in price and up in value, let's say now the binary is worth $80. We can get out of it at 80. And maybe you want to do that. Maybe you have to leave and you can't sit in front of the computer. Maybe you see the market maybe turning around. Well, when it's valued at 80, you can get out at 80 and take your profit. Your profit will be from where you bought in at 57 to where you sold at 80. And you'd make 23. Okay? You can get out early. Or what if you see the market's going way against you and all of a sudden, hey, I have a sell, say I was looking at my chart and I had a buy signal, so I buy. But then all of a sudden, now I have a sell signal. The market's going to go the other way. What does that mean? Oh, well, market's going south now. I guess I'll just hold on to this binary and let it go all the way to 0 and take a whole loss. Or you could get out early. Maybe you bought it at 57, market's going down, and now it's only worth 25. You can get out and limit your loss. Okay? So you can exit, you can hold till expiration, or you can exit early to manage the trade. You can exit early whether it's going for you or whether it's going against you. Now, some of you say, I didn't know that. How do I do that? Well, if you placed an order, okay, and it's right here in your open positions, all you have to do to exit early is click on it. It opens up a ticket already marked sell, and you place, and it's gone. Do you see that? Everybody see how to do that? Let me show you one more time. I'm going to buy this contract. I'm going to show a market order, okay, just to get it in there. Okay, so I bought this contract. It's here in my open positions. Now, whether it's going for me and I'm profitable and I want to exit early for profit, or whether it's going against me and I want to exit early, limit my loss, it's here open. Now, what is it? It's a buy, right? I bought it. You can see it's a buy because it says +1. So if I click it if I bought it, what do I got to do to get out of it? I got to sell it, right? So if I click it here, the ticket opens automatically marked sell, and I can exit the order, and it's gone. See that? Works the same way with anything else. All right, same with a call spread. Let's say that I was in a call spread, and I'd gone in and I thought the market was going up, so I bought the call spread, okay? And so it's here in my open position, see, +1, I bought it. Well, if the market starts going my direction and I'm up in profit and I want to just exit, hang on to some of that profit. Maybe it's not the full profit. Maybe it's not the full profit that was listed on the ticket. But what you have to realize is just because this number is listed on the ticket, does that mean the market's going to go up 337 pips? No, this is just telling you where the floor and ceiling is. How much you have to put up in the trade, how much, where can you profit to? Okay, your true risk reward is based on what the chart is telling you, based on what the market does, right? So if I'm in this call spread, whether it's going for me and it's profitable and I want to lock in some of that profit early, or whether it's going against me and I don't want to take a bigger loss, or let's say it was this chart set up here and okay, it's coming down, it's coming down, it's coming down. Okay, the market's now at my stop here where I said I'm not going to lose any more than that, so I need to go ahead and get out of the trade, and let's just go ahead and get out of it. Bam, it's done, right? That money that was put on hold is put back into your account minus the difference, or plus the profit and fees, yes. So you can exit early. Same way, same exact way with the touch brackets. Okay, if you'd gotten into a touch bracket and you had bought a touch bracket, it's live, it's there, it's in your open positions. Okay, it's going up, it's profitable, you see the market starting to slow down, maybe reverse, and you want to exit early and lock in some of that profit, you can do it. If you're wrong and it comes down to your planned risk area, the area where your strategy or system says, hey, if it goes against you here, get out. Well, again, you can do that. Notice you bought this, it's +1. The only thing you can do with this is sell it. So when you click it and open it, the ticket's already marked sell and you can get out, whether it's going for you or against you. Okay? So just because a order ticket says max loss, you have to realize that is worst case. Or in the case of a binary, that's at expiration. Okay, you can manage that trade, plan your risk, exit early. Okay, now there are some situations called the dark zone, right? Like the last 30 seconds or last minute or two before expiration, the market makers are not required to, quote there. So if you're going to hold your trade to expiration, then okay. But if you want to manage it and get out early, you may not always be able to get out early that last, 30 seconds or minute or two. Okay, so if something's going against you, or you want to if you want to have that option to exit early, try to do it, within a minute or two of expiration. Okay, so does that make sense, guys? The difference of max risk that's listed on the tickets compared to your actual planned risk, and how Nadex does allow you to exit early. You can hold to expiration, or you can get out early, whether it's going for you or against you. So when you're looking at your strategy or system, and you're looking at your entries, choose your contracts based on that of, okay, where is my target? Where am I expecting the market to go? How far am I expecting it to go? So now I want to find a contract that has room for me to get to that level. And I want to find a contract that, maybe is not too far out to expiration, but long enough to let the market move there. Okay. And if I can find one that's I don't have to put up quite as much, great. But do I want to sacrifice a low risk, you know, a contract where I have to put up a lower amount of money, but I've got to buy way far away or sell way far away? Does it match up? Okay, because too many people, I especially see this with binary traders that are like, oh, well, I only trade binaries and I only trade these ones that are like, you know, $20 risk, like that's all I'm willing to do. And they hear about, oh, I heard about these great call spreads, and you know, I was looking at getting into those, but man, I click a button and it shows like $150 rent. Forget it. And you don't have the proper understanding of that, and it could be holding you back from checking out some of these other contracts, different binary strikes, checking out the call spreads, or taking advantage of these great new Nadex touch brackets. Okay, so keep that in mind, guys. Understand the difference between max risk listed on a ticket and true planned risk from managing your trade by following your system rules. Okay. Robert says, yes, I never really considered spreads, have a different outlook, better understanding, to spend more time and view videos. Yeah, Robert, absolutely, because you know, you go here to these spreads, and you know, you say, you know, oh, not that one. Let's see here. You know, you see one of these and you think, oh, 160s, I don't like that. You know, but you have to understand, you know, when it comes to one of these spreads, you know, you're trading more tick for tick, dollar for dollar with the market, right? Where if you buy in here and the market goes up 20 pips, well, then you're up about $20. If it goes down 20 pips, then you're down about $20. You're more mimicking, if you use that particular spread or one of the touch brackets, you're mimicking the market move dollar for dollar. You're not going in on a binary of 0 or 100 all based on one tick. They're completely different products, you know? And if you're a binary trader, all you think in your head and your heart beating fast is, well, whatever's listed right there, that's the amount I'm going to be down immediately in an instant at expiration. Right, Robert? So you're like, oh man, I'm going to be down 79 bucks immediately at expiration if I'm wrong. Well, on a spread, it's got to go against you 79 points, 79 pips to be down that much. You're going to probably have exited manually when you're down like 20, 25. You know what I mean? So understand that and let it open up some other opportunities here for you. Okay? Well, good, Robert. I'm glad you got that and glad you're looking at checking out those other things. And again, that's where what? The Nadex demo platform is great for trying out these other products. You don't have to just jump in with your live money to try something new that you've never tried before. Test them in demo. You know, if you're a binary trader and you trade those live, well, take some spread or bracket trades in your demo account. When you place your normal binary trades, test them out, see how they work for you. Check them out in demo and let me know how that works for you. So guys, thanks so much for being on this webinar. I hope this kind of helped you to understand true risk and reward with Nadex and how it definitely could be beneficial for you to check out some of their other products. Make sure to visit nadex.com, the webinar section, to sign up for the upcoming webinars. And come visit us over at apexinvesting.com. We've got some great stuff over there, some free tools for you. Feel free to ask us any questions. We're here to help. All right, guys, thanks so much. Have a great day, a great weekend. We will see you next week on the webinar. Thank you so much. Bye-bye.